myself Vaibhav. In today's session, we are seeing that the gold is trying to rally on the higher side, and after consolidating closer to the US dollar 1900 per ounce levels for last couple of days, we are seeing the emerging possibilities of the gold moving past this consolidation phase and rallying upwards towards USD 2000 per ounce levels in couple of days. So in a way, you can say that the stage is set and it's time for the gold to shine, and that's why today's title for market movers can't be more appropriate than this gold set to shine. If you consider the trading context for the day, earlier in the day we got the PMI numbers for the China service sector, and here the readings are actually better than the expectations, and this is reflecting the continued strength in the Chinese economy after the economy has been reopened, as most part of China have been able to control the coronavirus pandemic, and because of that more and more parts of the Chinese economy are back to the business, and that is being reflected in the services PMI, which is now for the month of September stands at 54.8, and it is better than the prior month's reading of 54. Moving on to the European trading session, we got plenty of data points for the United Kingdom, and noteworthy of these releases is the industrial production number. And the industrial production now for the month of August is in the growth zone, but in terms of year on year, it is still declining. If you consider the month on month figure, the growth is there of 0.3%, which is lot slower compared to what we saw in the prior month when the growth was at 5.2%. And in terms of year on year, the industrial production is still below 6.4% of what it was in the August of 2019. So there is a lot of catching up to do in next couple of months, and I think a lot is going to depend on how the coronavirus pandemic plays out in the broader United Kingdom. Along with that, we also got the GDP numbers, monthly figures these are, and in terms of month on month, there is a growth of 2.1%, but in terms of year on year, the GDP has actually declined by 9.3%. Now, moving on to the North American trading session, we don't really have important data points for United States. For Canada, we have these employment figures coming in. We have the employment change numbers. Along with that, we have the participation rate, the unemployment rate, and also the count for the hourly wage rates. So all these data points related to the employment situation in Canada is scheduled to be released. And as things are improving, Canada is also one of the better performing countries in terms of coronavirus management, and because of that, the employment opportunities in China are the Canada are expected to rise, and we might see the Canadian economy adding more than 200,000 jobs, and also the unemployment rate is likely to go down towards 9.7% compared to 10.2%, which was in the prior month. Now let's shift our attention to the technical outlook. Here we will first see the gold XAU in terms of USD, and then we will move on to the Euro USD. Let's start with the gold's technical outlook. This is the daily time frame chart, and as you can see, the gold has shown this resilience, and after getting close to the 38.2% Fibonacci retracement of its prior rally, starting close to 1450 and going all the way to 2050, we have this consolidation phase, and now the consolidation phase is likely to give way to fresh move on the upper side. As of now, things are looking promising, and because of that, I am feeling that in next couple of sessions we are pretty much likely to see the gold getting close to these prior swing highs, which are there just little above 1950 USD per ounce levels. And if we consider the broader sentiments, the year has been phenomenal for the gold, And I think as we are in the last leg of this year, this bull run is likely to continue, and we are here trying to figure out if there are any short to medium term opportunities emerging for us to exploit the situation to our advantage. So coming to the lower time frame chart of 4 hourly, we have this regression curve which has flattened to great extent after this consolidation phase. We saw this steep decline of almost close to 6 percentage point, but then on the lower side, closer to the US dollar 1850 per ounce levels, we got this buying momentum back, and in last couple of sessions, the gold has been hovering close to USD 1900 per ounce, and now it has climbed up, and for the day, for today's session, it is holding well above this central pivot point, and that is giving me more reason to believe that we are pretty much past the bearish phase, the short term bearish phase in the gold, and it's time that we set our eyes on the next resistance zone, which is there around USD 1970 per ounce. And here, as is the chart's direction, I feel that we have to watch out for this USD 1900 per ounce level. And if we don't really see any swift move on the downside, and if the gold is able to hold close to this current price zone, we are pretty much likely to see the continuation of this upward momentum. And next week, we might see fresh highs being formed in the gold. So if you consider the hourly chart, we have the confluence zone of 50, 100 and 200 SMA closer to the USD 1900 level, and as is the situation here, we saw that this swift turnaround from the lower side to the higher side of this SMAs has actually turned the situation around for the gold, and if the gold is able to hold well above this immediate convergence zone of these three key SMAs, there are reasons to believe that the gold is then going to get past this prior swing high, which is there around USD 1920 per ounce, and inch towards USD 1950 in coming days. So for us, I think if we are fortunate enough to get any entry point anywhere closer to this USD 1900 zone, we should go for it and look for fresh buying opportunity closer to this convergence zone of these three key SMAs, while keeping the stop loss just little lower than the immediate swing low, which is closer to USD 1880. So for a risk of around 20-25 points, you can target almost 50 points on the higher side, and that will give you the risk reward ratio of 1 is to 2. Now moving on to the currency segment, here we will first see the Euro USD. Actually, this is the only currency pair we are looking at, but if you consider the gold and then the euro, the broader theme is of weakness persistent in the USD, and the Euro USD is also counting on that and inching on the higher side. Here is the daily time frame chart for the Euro USD, and for Euro USD, the turnaround point has been closer to 50% Fibonacci retracement of its rally starting from 1.12 and going all the way to 1.2. And now, after this long consolidation closer to the 1.17, I feel the euro is also trying to get past these immediate hurdles, and then eventually it is likely to be on its way towards this immediate swing high. So looking at that possibility, here we are trying to see if there are any emerging opportunities for us in today's session. Yesterday we had talked about the importance of holding well above the immediate swing low, and also on the hourly chart we had pointed out the key SMA and the upward moving trajectory. And then in the the US trading session, the euro indeed dived lower, but then it recovered the lost ground fairly sharply, and now we are looking at the formation which is looking promising from the bullish trading perspective. So here we are going to keep a eye on this central pivot point of this month's pivot point series, and I feel that as long as the euro is able to hold well above this central pivot point, we can be confident about going for the fresh long positions in the euro usd. Even if you consider the regression curve, now it is slowly bending on the upside as this consolidation phase has brought back the euro usd above the middle band, and because of that many market participants are turning bullish on the euro usd. So coming to the lower time frame chart of hourly, we have this upward moving trajectory, and it has hold. It has held really well, and this yesterday's sharp move on the lower side and then equally sharp reversal points to the continued support for the euro USD on the lower side. And now for today's session, I think we should be looking at this convergence of 50 and 200 SMAs, and anywhere close to this SMA zone would be an excellent idea to go for the fresh long position in the Euro USD while targeting the immediate swing high or even levels beyond that, while keeping the stop loss just little below this 200 SMA. So here you are looking at this emerging opportunity to go long for the Euro USD in the area closer to this 1.176 to 1.177 zone, while keeping the stop loss anywhere close to 1.174. So for a risk of around 30 to 40 pips, we will be in a position to target almost 60 to 70 pips on the higher side, and that will roughly give you the risk reward ratio of 1 is to 2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. See you on Monday. Goodbye.